Think Realty Nation, it's Abhi Golhar. Welcome to the Think Realty podcast. Excited to have you here today. I'm excited to be here. We have an awesome show lined up for you. We're talking with the guys over at Clear Sky Financial. Not only what they do, but what their overall thoughts are about the national market, their local market, and essentially what you need to know as a real estate investor to go ahead and kind of get started with these things. You know, especially right now, times are very interesting. There are a lot of things that you need to know as a real estate investor, lender, broker, whomever, about the market, about your area, and how do you analyze this stuff. You have to do your due diligence. You have to understand where the market is, and you know what? Sam and Charlie, they're going to help me kind of dissect this a little more. After that, what's on my agenda here? We're talking about increased foreclosures in the West. That's kind of interesting. Kind of timely, don't you think? This podcast is brought to you by Roofstock. If you're ready to buy your next investment property, then check out Roofstock, the #1 marketplace for buying and selling single-family rental homes. Featuring tenant-occupied rental properties for sale in over 20 states, Roofstock makes it easy to invest in cash-flowing real estate outside your local market. And to help you invest remotely with confidence, all properties are backed by Roofstock's industry-leading 30-day money-back guarantee. Sign up for free today to find your next cash-flowing rental property at roofstock.com/thinkrealty. So my guests today, Sam and Charlie from Clear Sky Financial. I'm excited to have these gentlemen on the show. We're talking about markets, we're talking about what you need to know and exactly what they do. You know, I respect these two guys because for me, I wake up every day and I wish my snow globe was a crystal ball. And if I had a crystal ball, I would turn to these two gentlemen because they're the ones that do. Sam, Charlie, welcome to the show.
Thank you. Thank you for having us.
You got it. So give us a little background, a little bit about Clear Sky. Who are you and what do you do specifically?
Okay, we're Clear Sky Financial. We are a hard money lender in Washington, D.C., Northern Virginia, and Maryland. We also flip houses under the name Clear Sky Properties. We flip between 2 and 3 houses a month. We're very active buyers on the flip side, and we're also very active on the hard money side. We spend a lot of our days analyzing deals, making sure they make sense from the financial standpoint, and I attend a lot of courthouse auctions. I bid a lot of online auctions, and so that's basically most of my day.
Got it. In a recent newsletter, I think this was June of just this year, that Clear Sky put out, I love the first sentence, right? This is like the quintessential, you gotta pay attention to this first sentence. Quote, in order to profit at real estate investing, one needs to be alert to real estate trends. And then you go on to say there are macro trends that impact every U.S. housing market. Growth, recession, and capital costs are national drivers. Local trends include the availability of housing stock, labor, construction costs. And while it's critical to monitor both national and local trends to maximize profits, the newsletter, and of course there was a national follow-up article in the Think Realty magazine, so thanks for doing that, guys. That was awesome. But quote, this newsletter focuses on local trends. So you're in the D.C. area. What are you seeing there, and what mistakes do you find investors are making by not paying attention to the trends?
We see pricing at a very local level in our region. We look at the neighborhood, the subdivision level. So the mistakes people make is when they overestimate the after repair value of the asset when they're evaluating it to begin with, because they can't hope on a future market value. They really got to buy into the current market, especially in Virginia where you're turning properties over very quickly, and same in Maryland. DC's a little longer development period, and so you have to look at DC over the course of, say, a year, as opposed to 5 months.
It's interesting, overvaluation of property, that's like just kind of step one, right? Like if you just don't get that right, you are absolutely shooting yourself in the foot with all the numbers on the deal, and you're probably going to come out a loser, and that's a major issue. What's one tip of advice that you would have for new investors kind of getting into the game? Because I love talking to new investors and experienced investors, but one tip from you, Sam, for new investors regarding valuation.
Conservative numbers. You can't bet on a future. You have to look at the actual sales that have happened and not anticipate 5% growth. If you only have a 12% margin on your deal and 5% of it is on future growth, that only leaves you with 7% if things don't go well in the market. And if they go poorly, then you're upside down right away. doesn't even consider potential errors in construction.
Right. So, Charlie, the market's going up. The market's always going to go up, right, man? Like, you cannot tell me that the market is not going to come down, right? Because whatever goes up keeps going up. I learned that lesson in 2008, right? Like, that is my expectation of the market. So, Charlie, what are your thoughts? Obviously, there's this massive conversation, major conversation happening with, geez, there's some type of recession that's looming. Something is happening. Some ominous thing is about to happen. Maybe it's going to be some black swan event. I don't know. But what do you think?
Well, for sure. In this, particularly in the DC metropolitan area, one of the trends that we're seeing is that we're seeing a lot of irrational exuberance by the investor community.
Yeah.
They're bidding houses up very high. And one of the other pitfalls that we need to discuss is the renovation budget. A lot of times, especially in this area where labor rates are going high because there's so much demand, material costs are rising. These kinds of factors aren't taken into the renovation that it takes to sell the property at the top after repair value price. Because when people bid on properties, they assume that they're going to get a peak after repair value price. But what they don't understand is in order to get the peak after repair value price, you've got to put in a peak renovation budget. And so a lot of times they underestimate the budget. They're off by at least 20 to 30%. And we see that all the time. And so we're very nervous in the fact that I'm seeing that happen over and over again. If this market stops appreciating, which we think we're getting close, then if it goes the other way, then they're in trouble. So
in your newsletter, you talk about how residential multifamily is also another indicator of some type of potential slowdown in your area. And quote, there are already submarkets in our region where prices have pulled back. Another indicator is the slowdown of residential multifamily construction inside the Beltway. This is being driven by the reality that fewer large lots are available, and the profit margins are very thin for big developments, and the cost of construction, labor, materials, taxes, permits continues to rise quickly in the DC markets. Question about that. How do you know that the large residential multifamily is an indicator of potential slowdown?
Well, first of all, we're well informed about that type of market because we're part of a group meetup monthly with very large developers in the region, and they're talking to us about their margins, and they're talking to us about what they're doing in the future. So we're looking at that closely. We think our information is quite valid in relation to that. And how that relates to all other market asset types is, people are making choices whether they're going into a high-rise building or whether they're going into a single family, or they're basing it based on pricing, and they're based on availability. If you have a lot of product available in any one segment, it's going to shift that market around quite a bit. And we're seeing it certainly at several ends of the market, the multifamily, and we're also seeing it at the top of the market, a slowdown in the DC metro area, especially the top of the market. We're definitely seeing a pullback in saleability of assets.
So question, you have money to lend, right? Clear Sky Financial, you lend money to seasoned investors, potentially new investors once they build a relationship with you. If I want to learn more, I'm going to go to cskyfinancial.com. That's cskyfinancial.com. Question for you, though. How are you adjusting where you are lending your money based on what you know about the market? Are you then picking different areas based on migration, movement, where people are going, and saying, okay, guys, we're going to deploy $5 million or $10 million or $25 million to investors in these areas that have experience versus these already saturated, crowded kind of markets? Is that kind of what's going on with you guys right now?
And it's not precisely what's going on. What we're doing is entering at different after repair value points, right? So if we think a market is softening, we're going to still lend into it, but we're going to lend conservatively into it. If we think that the market is like a accelerating market near, say, Capitol Hill, and it's a small townhouse, we know that's a very strong asset under any conditions. Our LTVs will be higher in that type of submarket.
Are you also finding that the time to get permits is increasing by from the city, like because they're just so slammed with all these permits that they need to push through, that sometimes it'll take an extra month or 2 or 3, and then you have operators like me looking at it like, I want to go jump in the lake right now?
Yeah. In the District of Columbia, certainly They have a permit acceleration process you can participate in if you want to push something through faster. But if you're not knowledgeable about the process and you don't understand to set it up right from the beginning, it is very slow. It's certainly taking longer now than it's taken at any point that we've worked in this market.
Got it. And Sam, Charles, maybe this question's for the both of you gentlemen together, and maybe one of you can answer it, then the other. Where are folks going now? Like, where's the inside tip here? If I'm to deploy, say, $250,000 or $1 million of equity into the DC market and surrounding areas, where should I be looking?
Well, in our area, one of the big drivers would be this thing called the hidden market. A lot of things are sort of off limits these days. The courthouse auctions, they're bidding these properties up way too high, leaving very paper thin margins. The online auctions, whether it's auction.com, XM, Home Search, Williams, all these, Hudson and Marshall, they're bidding those things sky high. So the best place to put your money is in the hidden market, which means you just need to drive for dollars. You've got to find vacant homes, you've got to find overgrowth in yards, and you basically got to, and at least in Virginia and DC, knock on doors, get a lay of the land, and that's probably where you should put your money. So it's not one area specifically where to dump money. It's just in a different type of marketplace, which we're calling the hidden market.
I like that. So that means that I actually have to go do work. Is that what you're telling me?
Yeah, and you have to do a lot of work, and you have to be rejected quite a few times. But when you find one, they're wonderful. They're really wonderful. We were working with a buyer just in the last month. He found a fantastic opportunity, one that no one else saw. He brought a couple of people together who didn't even know they had a house to sell. They had a house that had been abandoned for many years, and he got at quite a value price point. We're working on another one. Even today, Charlie is getting feedback on one that it looks like is going to work out quite well.
Awesome. So a quick background. We've about a minute and a half before we have to wrap up here. Quick background on Clear Sky. What can I expect in terms of kind of working with you guys from end to end, from start to finish, the process? How many days should I expect in terms of funding a potential opportunity? What's the application process like, the website? Plug all that stuff for me and give me a good kind of rundown.
Okay, the application process is very simple. We basically it's everything is deal specific. So send us the deal, send us the after repair value, send us your renovation budget. I will do the due diligence and make sure the numbers make sense. And then basically the way it works is a week later we'll fund it. As long as we get the title binder back and we have lender's title insurance, then we'll fund 2 or 3 days after that. One of the things that we do is we'll actually, once we vet the deal itself, we will vet your contractor out more than we'll vet the end user borrower. And so with that, we like to use we like to have new investors, because as long as their contractor is good, they're license bonded, they're going to do what they say they're going to do and the time they say they're going to do it, then we'll go ahead and actually fund the deal. We vet the contractor out, believe it or not, more than we vet out the end user borrower.
I mean,
the contractor is our saving grace.
Yeah, I mean, that's where the rubber meets the road, right?
Right.
Yeah, absolutely. Well, that's time. I certainly appreciate your input, Charles and Sam. Thank you so much. And I think Realty Nation, listen, I mean, these are two gentlemen that have over 20 years of real estate investing. As you just heard them talk about the market they are in, we touched on the national market a little bit. And quite frankly, they flip properties themselves. Not a lot of lenders do that, right? So they have boots on ground experience in their area. You definitely want to get in touch with them. Go to C-Sky. Again, that's cskyfinancial.com. We'll be right back. This segment is brought to you by Narada Real Estate Investments, your premier source for cash flow investment property. Visit www.turnkeyrealestateinvestments.com. To finish off the show, I want to talk about increased foreclosures in the West. And this is an article that you can find on thinkrealty.com on the blog, written by my good friend Darren Bloomquist with auction.com. There are a couple of very interesting statistics here. Western markets, and this is quote, Western markets are more at risk for increased foreclosure inventory in the second half of 2019, and most respondents, about 80%, expect only slight changes in foreclosure and bank-owned REOs inflows in the next 6 months. Here's some interesting high-level findings from the survey. Number one, 40% identified the U.S. West region as most likely to see an increase in distressed inventory in the second half of 2019. That beats out the Midwest at 23%, the Northeast at 20%, and the South 17%. I live in the South. Next tidbit, 71% plan to increase loss mitigation actions in the second half of 2019, with 81% of those expecting an increase in distressed inflow planning to increase loss mitigation actions. Kind of interesting there. Number 3, 40% identified expedited time to sale as their top disposition strategy, beating out return on investment, loss mitigation, and avoiding headline risk. Number 4, 46% selected property preservation as the biggest disposition challenge they face, beating out aged inventory, pricing execution, and regulatory hurdles. So kind of interesting. And what I've always noticed is California is generally a pretty leading indicator of what's going to happen in the next 12 months to 18 months to 16 months. So keep your eyes open and remember that an eyes wide shut investment methodology is not an investing methodology. Think Realty Nation, that's a wrap. Got any questions? Get in touch at any time. Go to thinkrealty.com. Until next time, happy investing. This podcast is brought to you by Roofstock. If you're ready to buy your next investment property, then check out Roofstock, the #1 marketplace for buying and selling single-family rental homes. Featuring tenant-occupied rental properties for sale in over 20 states, Roofstock makes it easy to invest in cash-flowing real estate outside your local market. And to help you invest remotely with confidence, all properties are backed by Roofstock's industry-leading 30-day money-back guarantee. Sign up for free today to find your next cash-flowing rental property at roofstock.com/thinkrealty.